It's arguable that there have never been more opportunities and reasons to start stock market trading. Bank deposits are currently returning a pitiful zero, while social media is flooded with success stories urging consumers to buy stocks. Since the start of 2020, the price of a Tesla share has increased nearly fourfold, from $85 to $932. After reading this, you wouldn't be the only one debating whether or not to buy Tesla stock. You may be wondering, how much Tesla stock do I need to buy to retire? If you want to leave work early, we'll break down the numbers for you in today's video. Watch to find out everything. Tens of millions of small and inexperienced individual investors entered the market last year, contributing to a significant increase in the volume of transactions on both the local and international stock markets. This deal use was mostly in the stocks market, where a growing number of platforms are providing services like zero commission trading, one-click trading, and $1 trading. Reports of incredible wealth from betting on specific stocks are all over popular social media sites like Facebook, Twitter, and TikTok, drawing in new users. It seems like all you need to do is get going and watch the money come in. First of all, there are some considerations to make when making investments. Because of its extreme volatility, investing in the stock market without sufficient understanding might be disastrous for you. First and foremost, only invest money that you are willing to lose. The only money you should invest is your disposable income, that is, money you have extra of without having to spend it and can potentially afford to lose without making big changes to your way of life. This shouldn't be the first money you take out of your wallet or the first money you save from your job. As a safety net, start by setting aside 3 to 6 months worth of spending. You can invest the money you would otherwise waste on anything else. And in fact, I highly recommend doing so. You see, money needs to be used in order for its value to be preserved. By the time this movie ends, I'm sure you'll want to think again about not investing in stocks. As they say, now is not the finest moment to plant a tree. It was 20 years ago. The markets have been rising too long, or you're afraid of an impending economic slump, which would cause the markets to tumble, etc. But investing takes time, and experience in the market is more important than timing the market. Having cleared that up, let's move on to the topic of stock purchases. Locating a retirement account that enables stock investments is crucial. You'll need to form a separate account if you want to invest your retirement funds in Tesla, because most 400 don't let you do that. It is the easiest option for the majority of people. You can invest in nearly anything through any broker, and they can help you start one. Additionally, you can decide to take a tax advantage now and pay taxes later, or to pay taxes now and benefit from tax-free withdrawals in retirement. Many 400-wide plans have self-directed brokerage windows. If yours does, you might be able to use your 400 to make direct investments in Tesla. Since the latter half of 2021, Tesla's stock price has risen by over 50, increasing the company's market capitalization to over $1.02 trillion. Only Toyota, which is currently the second largest automaker in terms of market capitalization, was surpassed as of 2020, but has increased in value by around $900 billion. If you had bought Tesla shares in 2020 at a little over $400 per share, you would have almost tripled your investment. A $1,000 investment on November 2, 2020 would be worth almost $29.40 today, or a 193 Dren. Returns on investment are much larger when you go back a few years. On November 2nd, 2016, nearly 6 years ago, Tesla was selling for $38 per share. Since then, a $1,000 investment has increased by $3,025, making it currently worth almost $31,286. In the same period, the SHFC 500 index would have returned 142.4. If you had bought Tesla in 2011, you would have profited handsomely, 5 figures. For those 10 years, Tesla expanded its product line to include the Model S, 3X, and Y. In addition to the Roadster, both the Tesla Semi and the Cybertruck have been revealed, but no launch date has been announced for either car. Tesla is a potential goldmine for investors if you subscribe to the FIRE financial independence, retire early movement. Over the last 10 years, the price of the stock has increased from $5.74 to $12.29. Hence, $1,000 investment made in Tesla in November 2011 would now be worth somewhat more than $204,000. That is a gain of over $20,000. A 357.4 return on an identical investment in the 10-500 would have been obtained. This does not, however, suggest that the SEP is a bad investment. In fact, because it contains every stock in the index ensuring that it is automatically diversified. The majority of experts, including renowned investor Warren Buffett, believe that it is the best location for most consumers to invest for the time being. Though we're concentrating on Tesla stock and how we may use it to fund a nice retirement, you should be able to ride roller coasters comfortably if you want to buy Tesla shares. This is due to the stock's success being defined by sharp fluctuations in share price. And not just because on August 31, 2020, the company announced a 5-for-1 stock split that reduced the price of a single share to $400 from an astounding $2213, 40 cents a share prior to the split. At present, the stock is trading above $900. See more about stock splits to get better understanding of how this operates. This year, there are rumors of another company split. This implies that the price of these stocks will drop, which will make investing in them more accessible. If you'd want further details, be sure to see the video we prepared about it. Long-term growth for Tesla will come from sources other than the sale of electric cars. The company has made a name for itself as a disruptor, and in the upcoming years, it could be able to keep up that reputation. There are numerous additional potential growth opportunities for Tesla. First, the business is concentrating on developing its full self-driving AST and autopilot technologies. To draw the best AI talent, Tesla hosted an AI Day event in August. More specifically, Tesla's capacity to draw the best people is what will determine its leadership in the fully autonomous driving space. A number of automakers and tech companies are working towards bringing self-driving cars to market, and most of them have the resources to do it. Technical expertise may be able to distinguish the victor in this case. So how would one use Tesla stocks for retirement? You leave your capital invested, sell some shares to remove what you need, and allow the capital that remains to grow. As we discussed before, this is called a FIRE movement. Assuming you possess $200,000, your investment increases by 10 annually. You will have $500,000 in 10 years if you leave it alone. But if you begin taking out $40,000 annually to spend, you won't have any money left in 7 years. $240,000 is the minimum capital for retirement. Tesla will yield an annual return of 20% on average. Considering that Tesla is a company that grows by more than 50 annually on a fundamental level, I believe 20 is incredibly fair. These are not only arbitrary figures. You invest $240,000 in Tesla shares and take out $4,000 per month for the following 30 years. 30 years later, you will still have $240,000. Why did your capital not decrease? Recall that you invest the remainder after taking out what you require. Therefore, if $240,000 in cash is required, you will need 27.7 shares. If you divide that amount by the projected value of Tesla stock by 2030, which is $8,636. In current currency, 27.7 shares are only worth $25,000 if you convert them to the stock price of about $900. Next on the list of worries is inflation. Although it is a legitimate worry, more stocks will rise significantly more than inflation. Should inflation start to rise? What then is the issue? Inflation should only be a problem when it comes to lifestyle inflation. I'm not sure what other justifications someone could think of in order to avoid making an investment in Tesla. Overall, we have a lot to anticipate from Tesla over the next 10 years and beyond. From this point on, the company's stock may increase even more as it makes headway on various fronts. Do you believe that purchasing Tesla stock is a must for a retirement plan? Please leave a comment.